Wall Street is a shark's world, filled with people each more psychopathic than the last. In this world, where making a place for oneself is difficult, some are prepared to use the most extreme methods to succeed. Among them is a man who has managed to turn trash into treasure. His name is Michael Milken, whose unscrupulous methods have earned him the attention of the FBI and whose empire has been built on the destruction of millions of people's lives. Milken's story is not a fairy tale. It's a roller coaster ride of success and failure, of glory and shame, of triumph and tragedy. Milken faced many enemies and challenges along the way, who accused him of creating chaos, greed, and corruption in the financial system. He also broke many laws and rules, engaging in illegal and unethical activities that landed him in prison. He lost his reputation, his business, his freedom, and his health. The story of Michael Milken is one of the most fascinating and controversial stories in the history of finance. It's filled with lessons, drama, and multiple twists. It's a story that has never been told quite like this before. Now, the key to Milken's success and downfall was the junk bond market, also known as the high-yield bond market. These were bonds issued by companies with low credit ratings, offering high interest rates to attract investors who were willing to take a risk. The junk bond market was a game changer, opening up new opportunities for financing and growth for many businesses that would otherwise be ignored by traditional lenders. But what are junk bonds, and why are they so powerful? To understand that, we need to understand what bonds are and how they work. Bonds are a type of debt or money that is borrowed and has to be paid back with interest. Companies issue bonds to raise money for various purposes, such as expanding their business, buying new equipment, or paying off debts. Investors buy bonds to earn interest income and gain their money back when the bonds mature or reach their due date. However, not all bonds are created equal. Some bonds are safer than others, depending on the creditworthiness of the company that issues them. Creditworthiness is a measure of how likely a company is to pay back its debts on time and in full. The higher the creditworthiness, the lower the risk of default or failure to pay back. Credit ratings agencies such as Moody's and Standard & Poor's assign grades to bonds based on their creditworthiness. The highest grade is AAA, which means that the bond is very safe and reliable. The lowest grade is D, which means that the bond is in default or has already failed to pay back. Anything below BBB is considered junk, which means that the bond is very risky and unreliable. But here's where Milken's genius comes in. He saw that these junk bonds were not as bad as they seemed. He saw that they offered higher returns than investment-grade bonds if you invested in many different companies and diversified your risk. He saw that there was not enough supply of these junk bonds to meet the demand of investors who wanted higher returns. He had a brilliant idea. What if he could create new junk bonds by helping companies borrow money that they normally couldn't get? This idea was revolutionary because it opened up capital access to thousands of companies that otherwise would have been ignored or rejected by traditional lenders. It created a new market for high-yield bonds that enabled entrepreneurs to pursue their dreams and innovations. It funded industries that are now essential to our lives, such as cable TV, wireless communications, biotechnology, and healthcare. It democratized finance and challenged the status quo. But how did he do it, and how did he turn his idea into a reality? To answer that, we need to go back to the beginning of his story and see how he rose from a humble background to become one of the most influential and controversial figures in the financial world. Milken was born on July 4, 1946, in Encino, California, to a middle-class Jewish family. He attended Birmingham High School, where he was the head cheerleader and worked at a diner while studying. He had a passion for math and finance, and he was influenced by his father, who was an accountant and a financial analyst. He also had some notable classmates, such as future Disney president Michael Ovitz and actresses Sally Field and Cindy Williams. One day, he saw Ovitz driving a fancy car with a beautiful girl next to him. He asked him how he could afford such a car, and Ovitz told him that he made money by investing in stocks. Milken was intrigued by this idea and decided to learn more about stocks and investing. Milken graduated from high school in 1964 and enrolled at the University of California, Berkeley, where he majored in business administration. He was a brilliant student, graduating with highest honors in 1968. He also made a groundbreaking discovery that would change his life and the world of finance. Now, while studying at Berkeley, he read some papers that showed how bonds from companies that were in trouble paid more than bonds from companies that were doing well. He realized that the ratings agencies that gave grades to bonds were too scared and missed the potential and assets of these fallen angels. He also realized that by investing in many different junk bonds, he could lower the chance of losing money and increase his profits. Milken had found a secret treasure in the bond market, and he wanted to tell everyone about it. He wrote his thesis on junk bonds and tried to get a job at several investment banks as a bond analyst. But most of them rejected him, as they did not get his vision or like his innovation. But there was one bank that took a chance on him, Drexel Harriman Ripley, a small and gutsy investment bank based in New York. Milken got a summer job there in 1969, thanks to his professors at Wharton School of Finance, where he was doing his MBA. He wowed his bosses with his knowledge and passion for junk bonds and got a full-time job after finishing his MBA in 1970. Milken's career at Drexel was awesome. He quickly became the boss of low-grade bond research, getting some money and power to trade. He showed himself as a smart and successful trader, making money for himself and his clients. He also made a loyal and hardworking team of traders who shared his vision and excitement for junk bonds. In 1973, Drexel merged with Burnham & Company, another small investment bank based in Philadelphia. The new firm was called Drexel Burnham Lambert, and Milken became the leader of convertibles, a type of bond that can be changed into stock. He convinced his new boss, Tubby Burnham, a fellow Wharton graduate, to let him start a special division for junk bonds, which turned out to be a great decision. Milken moved his operations from New York to Los Angeles, where he felt more relaxed and closer to his clients. He set up his office in Beverly Hills, where he worked long hours and hardly left his desk. He talked to his team and his buyers through phone calls and memos. He also built a network of faithful and eager buyers who trusted his judgment and expertise. Now, before I tell you what this strategy was, I want you to imagine something. Imagine that you are a treasure hunter, and you have a map that shows you where to find hidden gems in different places. You also have a team of loyal and adventurous friends who are ready to join you on your quest. You also have a friend who is an expert in gems and can help you sell them at a great price. Your strategy is simple. You would go to the places that have gems that are overlooked and undervalued by others, dig them up, and sell them to your friend at a higher price. You would then use the money to go on more adventures, finding more gems, and making more profit. You would also use your friend's influences and connections to help you achieve your goals, whether it was discovering new lands, getting better equipment, or escaping rival treasure hunters. This is similar to what Milken did with junk bonds. He would look for companies that had bonds that were ignored and undervalued by others, buy them, and sell them to his investors at a higher price. He would then use the money to fund more companies, creating more bonds and making more profit. He would also use his influence and connections to help his clients achieve their goals, whether it was expanding their business, buying their rivals, or resisting hostile takeovers. Milken's success was phenomenal. He made billions of dollars for Drexel and himself, earning him the nickname the Junk Bond King. He funded over 3,200 companies across various industries, such as cable TV, healthcare, casinos, airlines, and media. Some of these companies became well-known brands, such as CNN, MCI, Turner Broadcasting, MGM, and Viacom. He also helped launch the careers of many entrepreneurs and investors who followed his footsteps, such as Ted Turner, Steve Wynn, Carl Icahn, T-Bone Pickens, and Henry Kravis. Milken's impact on the financial world was immense. He created a new market that was worth over $200 million by 1989. Whispers in the financial world dubbed him the most powerful American financer since J.P. Morgan. He challenged the status quo and disrupted the power structure of Wall Street. He democratized capital and empowered the outsiders who had great ideas but lacked access to funding. But Milken's success also came with a price. His aggressive and unconventional tactics attracted scrutiny and criticism from regulators, competitors, and media. His involvement in the high-yield bond market also exposed him to various risks and controversies that ultimately led to his downfall. But what were the risks and controversies that Milken faced? And how did they lead to his downfall? Well, buckle up, because it's a wild ride. One of the risks that Milken faced was the craziness of the junk bond market itself. As more people wanted junk bonds, their prices and interest rates went up. This made them harder and more expensive for investors and issuers to get. To keep the supply of demand in balance, Milken had to shake things up in the market by funding corporate raiders who used junk bonds to take over big corporations with a lot of debt. These corporate raiders were known for their nasty practices, such as selling off assets, firing workers, breaking up divisions, or blackmailing target companies through greenmail. Greenmail is when a corporate raider buys a big chunk of a target company and threatens to take it over unless the company pays them off at a higher price. They cause chaos in corporate America, messing with or ruining many established businesses and industries. Some of them were Milken's buddies or customers, such as James Goldsmith, Carl Icahn, T-Bone Pickens, and Saul Steinberg. Milken's role in these takeovers was shady and sketchy. He not only gave money to these raiders, but also told them which companies to go after, how much to pay, and when to strike. He also used his power and connections to mess with the stock prices of the target companies, making fake demand or supply for their shares. He also did insider trading, using secret information from his clients or coworkers to make money from the market movements. These activities were illegal and wrong, and they caught the eye and suspicions of the authorities and the media. The Securities and Exchange Commission, SEC, the federal agency that watches over the securities industry, had been looking into Milken and Drexel since the early 1980s, thinking they did various bad things. The SEC was not alone in chasing Milken and Drexel. The Justice Department, the IRS, the FBI, and several state attorneys general also joined in, starting their own investigations and lawsuits against them. The investigations got worse in 1986 when two of Milken's co-workers were busted for insider trading. Dennis Levine, a Drexel broker, and Ivan Boesky, a famous trader, both admitted to securities fraud and ratted out Milken in several illegal deals. They said that Milken had paid them millions of dollars for inside information or favors. They also named other Drexel employees and clients who were part of Milken's schemes. The revelations shocked and angered the public and the media, who had been watching Milken's rise to fame and fortune with interest and respect. They showed the dark side of Milken's empire, revealing the corruption, greed, and deception that drove his success. They also made people doubt the honesty and quality of the junk bond market, which had been praised as a source of innovation and growth for the economy. In 1988, the SEC sued Drexel and Milken, accusing them of multiple bad things, including insider trading, stock manipulation, fraud, racketeering, and tax evasion. The lawsuit was based on evidence gathered from Boesky's testimony, wiretaps, documents, and witnesses. The lawsuit threatened to destroy Drexel and Milken's reputation and business. Drexel tried to deny it at first, but they soon realized they were doomed. The evidence was too strong, and the public was too angry. They decided to cut a deal with the feds in 1989. They pleaded guilty to 6 counts of illegal trading, paid a record fine of $650 million, and agreed to cooperate with the investigation of Milken. They also dumped Milken like a hot potato and kicked him out of the firm. Milken was left alone to face the music. He was charged with 98 counts of criminal activity in March 1989. He could have spent 300 years in prison if he was found guilty of all of them. He claimed he was innocent and got ready for a long and expensive legal fight. But things didn't go as planned for Milken. In September 1990, he shocked everyone by changing his plea from not guilty to guilty. He agreed to plead guilty to 6 counts of securities violations in exchange for dropping the other 92 counts against him. He also agreed to pay $200 million in fines and $400 million in restitution to Drexel's investors. He also accepted a lifetime ban from the securities industry. But why did Milken change his mind? What made him give up his fight? There were several reasons that influenced his decision. One reason was his health condition, which had worsened due to his cancer treatment and the stress of the trial. He wanted to focus on his recovery and spend more time with his family. Another reason was his family situation, which had suffered due to his legal troubles and the negative publicity. He wanted to protect them from further harm and embarrassment. A third reason was his realization that he had little chance of winning the trial, as the evidence against him was overwhelming and the jury was hostile to him. Milken's plea deal was approved by Judge Wood, who sentenced him to 10 years in prison in November 1991. She emphasized the seriousness of his crimes and the harm he had caused to the financial system and the public trust. She also praised his philanthropic efforts and his cooperation with the government. Milken's sentence was later reduced to 2 years due to his cooperation in testifying against his former colleagues and displaying good behavior. He served 22 months in prison before being released in January 1993. Milken had some powerful friends who wanted to get him out of trouble. They asked Donald Trump to pardon him in 2018. Milken had been trying to get a pardon for a long time from different presidents. On February 18, 2020, Trump finally gave him a full pardon, but that didn't mean he could go back to trading securities. He still needed a new license for that, and he didn't have one. Milken's fall from grace was a dramatic and tragic one. He lost his reputation, his business, his freedom, and his health. He also faced the anger and resentment of many people who blamed him for their losses or misfortunes. He had to live with the guilt and shame of his actions and their consequences. But Milken did not give up or give in. He accepted his fate and tried to make the best of it. He used his time in prison to reflect on his life and learn from his mistakes. He also used his time out of prison to rebuild his life and make a positive impact on the world through his philanthropy. After serving his prison sentence, Milken faced another life-altering challenge. He was diagnosed with an aggressive form of prostate cancer that had a low survival rate. He had to go through tough surgeries and treatment that left him feeling weak and drained. And the stress from his legal mess weighed heavily on his family life. Despite all the challenges, Michael decided to fight back. He set out on a journey of change, trying out new things like meditation, special diets, and spiritual retreats. He even sought advice from religious leaders to find strength. Miraculously, he beat cancer and entered remission. This life-changing experience led him to a new purpose. Instead of chasing money, he turned to helping others. Michael started the Milken Family Foundation to support education, public health, and medical research. He also founded the Prostate Cancer Foundation to fund research for a cure. And he didn't stop there. He set up the Milken Institute to promote economic growth and social progress. His philanthropy made a big difference. He honored outstanding teachers with awards and provided college scholarships to smart students from all backgrounds. He preserved Jewish musical heritage and encouraged entrepreneurs to find new solutions for education. Michael's efforts accelerated medical discoveries, bringing hope to those in need. He hosted conferences that brought leaders together to tackle global issues. For all his good work, he received awards and recognition. People praised him as one of the greatest philanthropists and entrepreneurs of his time. Despite his redemption and transformation, Milken's legacy is still tainted by his past crimes and controversies. He remains a polarizing figure in the financial world, admired by some and despised by others. He also faces ongoing legal and regulatory challenges that limit his involvement in the securities industry. One of the problems is that he can't work in the finance industry anymore. The SEC banned him for life when he pleaded guilty in 1990, and they won't let him off the hook. He tried to fight it or change it many times, but he always failed. Another problem is that he always gets watched and investigated by the authorities and the media. They think he might be breaking the rules or doing something fishy. For example, in 1998, he had to pay $47 million to settle charges that he was working as a consultant for MCI Communications. In 2013, he was investigated by the SEC for allegedly giving investment advice to Guggenheim Partners, a big financial firm. He said he didn't do anything wrong and no charges were filed. Milken also gets a lot of hate and criticism from the public and the media. They think he is a greedy and ruthless guy who messed up the financial system and the economy. They blame him for creating a culture of corruption and greed that led to scandals like Enron, WorldCom, and the subprime mortgage crisis. They also don't believe that he is really doing good things with his philanthropy. They think he is just using it as a cover or a way to make himself look good. But Milken also has a lot of fans and supporters who respect and appreciate what he did and what he does. They think he is a visionary and a pioneer who created a new market that helped many companies grow and succeed. They thank him for making capital more accessible and empowering entrepreneurs who had great ideas but no money. They also praise him for his generosity and commitment in his philanthropy. They see him as a leader and an influencer in many fields. Despite the fact that he wasn't always the most honest man, Milken changed the world of finance forever. His life story is truly impressive, facing trouble, scandal, prison, and cancer with courage, resilience, humility, and faith. He is a man who continues to make an impact on the world with his vision, innovation, generosity, and leadership. However, he's only a pawn in the global game. There's an even more powerful man who literally controls the world with his company, dictating and imposing his political agenda on the world's biggest corporations. This man is Larry Fink. If you want to know how he did it and what are the consequences of his immense influence, you can watch this video. Thanks for watching and see you next time.